Good morning and welcome to our seminar number 1. The topic of this seminar is the backroom overview, how things work for level number 1 investors in our wealth building opportunity for 2018. Let's take a minute and review some of the program benefits. It's a one-time investment. You have a choice of investment levels from level 1 through level 4. Today we're going to be reviewing the level 1, which is the minimum level entry-level investment. At even level 1, you get a better ROI than bank interest. Your investment is secured by real estate. It isn't pie in the sky. It isn't stocks and bonds that go up or down. It is secured by something you can drive by, walk on, and check out anytime you want. Real estate. The investment will generate rental income. The investment should appreciate over time. This is called real estate appreciation. This is a long-term strategy. We're basing our model on a 5-year plan, minimum of a 5-year plan. So this is why we say a long-term investment strategy. The real estate will be professionally managed and marketed by SG Resorts International. As an investor or partner in the company, you have access to a vacation network for our group of investors. And at whatever level you're at, today we're talking about level 1, you're free to sell your investment either back to the group if they want to purchase it, or to any of your friends or relatives or anyone who would be interested in buying you should you be forced to sell or need to sell at any time in the future. So we're going to take a look at this, and the investment level and the structure. This is the minimum of $12,000. And that's what we're talking about today. The wealth building opportunity has 4 levels. But again, we're only going to focus on group 1, level 1 today. Now the level 1, we're going to say, in this example, is a $50,000 investment. And what we're going to be purchasing with the $50,000, and this could be considered maybe medium to the high side because we are looking for distressed properties, but even more so, our philosophy is we look for distressed people. We try to pick up properties literally for pennies on the dollar whenever possible. But in this example, we're going to say the purchase price of this particular RV lot was $50,000. And there are 4 investors involved in this particular property, and each one has purchased a share of $12,500, or more accurately, they contributed $12,500, and this particular RV lot was purchased. Now, going into it, we're setting a flip point or a price point to flip the unit of $75,000. So at some time in the future, the moment the real estate market appreciates enough or bounce back enough to where we can sell this particular lot for $75,000, it will be flipped, and that will give a flip profit of $25,000. Now, during the 5-year period of time, we're going to be generating rental income from this property, and we're going to use as a average rate of $65 per night. So a weekly rental at $65 a night would generate $455 per week. Now, if we look at this on an annual basis, and we're going to build our 5-year model based upon this example, but at $65 per night, 100% occupancy, which we know is not going to happen unless you rent the lot to one person all year. And when you do that, you generally discount it. But if the ideal situation existed and we rented it 100% occupancy factor, you would get $23,660 annually, which basically gives you an annual return on your investment here of roughly 47.3%. And that is a fantastic rate of return or ROI annually. Now, realistically, the worst case would be that your lot is rented 50% of the time, and that would mean that your annual revenue from rentals would be $11,830 per year, and that still gives you a 23.6% return on your original investment. And that's an annual return, and we're going to project it out over 5 years. However, a more realistic occupancy factor would be 70%. And if this particular lot was rented 70% of the time, it would generate $16,563 annually, which would equate to a 33% return on your investment annually. And this is pretty good by any standard. Certainly beats putting your money in the bank. Now let's take a look at what this is over a 5-year period of time and really what you can anticipate to get back more realistically. At a 70% occupancy factor, you're going to have $82,815 over the 5-year period waiting for the flip. The flip profit itself will be $25,000, and this will give you a total gross amount of $107,815 received over that 5-year period of time. Now, we're estimating the cost of ownership for the lot over the same 5-year period of time to be roughly $18,000. So this means that your net ROI is $89,815. You received $89,815 on a $50,000 investment. And this is roughly 179.6%. Think about this for a minute. And what we have here, you're going to cash out. There's 4 investors in the group. You cash out per investor of $22,453.75. And that is basically double the amount of money you invested in our basic group 1, the minimum investment group in our wealth building program.